traders at UBA say the market is calm as focus remains skewed to today's primary market auction. Meanwhile, market rates, money market rates are expected to increase marginally for the rest of the week due to bonds and T-bills auctions settlements. Chuka Nwachukwu, head of ALM and balance sheet management at UBA, joins me for a midweek update of the various segments of the market. Chuka, thank you for joining us today.
Thank you, Esther. Good afternoon.
Good afternoon. Let's start with the auction by the DMO today, 228 billion and Treasury bills auction. If the results are out, walk us through what the outcome was. If not, talk to us about expectations about subscription levels and stop rates.
Okay, thank you. The results are not out yet. We have 228 billion on offer. The last auction 1 year came out at 20.5. We expect to see this within 20.5 to 20.6 levels. The system is highly liquid, like you rightly mentioned. System liquidity is well over 850 billion positive. So that will obviously affect the auction today because we will definitely see some of this liquidity, banks bidding aggressively at the auction today due to the liquidity we have in the system.
All right. Before we move to today's trading action, on Monday, the DMO sold 297, offered 450 billion, but subscription amounted to 305.2 billion. Could you talk to us about that? Why we didn't see a total or a full subscription?
Well, it's been from the beginning of this year to now, we've noticed a high yield regime, if I might use that word. The yield has greatly been elevated due to activities by CBN in terms of FX. Of course, the increment in MPR, and that will obviously affect the yields on the fixed income market. And so, investors as well as traders say have high appetite for high yield. And so that's why we saw that the subscription on Monday, even though 450 billion was on offer, they sold less than 300 billion. And the longer end, for example, printed at 21 levels, and that also is an increment of about 161 basis points from the last auction. Really, this is actually a good level to invest, especially if you're looking to keep position, knowing fully well that towards the end of the year, we see this yield decrease to about 14, 15 levels. So I think that some investors are just trying to be a bit, smart, by, holding on to higher yield since we'll be experiencing high yield levels.
Right. Okay. Bring us up to speed on trading today. Where are investors looking for value? Let's start with the bond market on the yield curve.
So for the bond market, we saw three maturities that were on offer: 2029, 31, and then 33 at the last auction. Interest is on those bonds presently, especially the 2033. Is currently trading about 10-15 basis points from the level it printed at the last auction. So on the bond side, we have interest on that. On the bill side, the market is pretty quiet due to the PMA auction. But again, we've seen interest on the shorter end of the curve, especially the 182 days. So we see this all throughout today, pending when the result is out, and then whenever the result is out, we'll be able to see what the interest will be going into the rest of the week.
Right. Let's move over to the FX market. We're seeing the Naira trading at 1,490. I believe it was 1.5 yesterday. Bring us up to speed where we're seeing the Naira today. And just also thinking about recent comments by the CBN that the worst of the Naira volatility is over. But help us understand why we're seeing this weakening of the Naira at the NAFEM market. Just help us understand what's going on.
So the Naira is currently trading at 1,500.79. It's a slight depreciation from yesterday. We haven't seen much activity on that end. But on the pronouncement by the CBN as regard Naira seeing the worst, I think that based on the policy they put in place, based on some of the demands, for example, the clearing of the backlog and all that, and so I believe that that has given them the confidence to say that, look, the demand is not as much as it used to be, though we might not see the adverse effect now, but probably within the next couple of months we'll begin to see the decrease in rate.
Right, Chuka, thank you so much for talking to us today. We appreciate your time on the show. That was Chuka Nwachukwu, of course, from UBA.